Hello, this is Jordan, and this is your precious metals video market update. This is being recorded on the late evening of Sunday, December 20th, 2020. And thank you for joining me today. And if I don't speak to you until then, I wish everybody a Merry Christmas, Happy Hanukkah, Happy Holidays, whatever you celebrate. And I hope you have a great 2021. As 2020 comes to a close. And as the year comes to a close and as winter is beginning, the correction in precious metals looks to be over and a rebound has begun. So I'm going to give you my thoughts on that and where this rebound could be going over the weeks and months ahead. And starting off here, we have gold at the top, silver at the bottom. These are daily bar charts. And annotated in blue, that's the net speculative position. Normally, I show you these in terms of open interest, but today in this chart, those are the nominal readings. And we can see that, note that we had the COVID crash and then the huge move higher in the 4 months after. And the commercials, they had to do a lot of short covering in the summer. Now, typically they tend to buy weakness and sell strength. That's how they position. And so them having to cover their shorts in the summer, that kind of altered the makeup of the CoTs. But nevertheless, looking here at the readings in blue, you can see for silver that prior to COVID, you had peaks around 100,000 contracts. And the reading last week, as of last Tuesday, was 67,000 contracts. And $26 for silver is really important support. I know it's up hugely overnight, and we'll have to see where it is by the time you're watching this video. But silver did not close above that resistance last week, so it's just something to keep in mind. 26 is really strong resistance. But if we see silver close above 26 a couple times and then make a weekly close above it, there's a good chance that it's going to be able to rally back 29 or 30 and retest the summer high. And as far as the net spec position, it's starting to rise, but my point here is there's plenty of room for it to get to 100,000 contracts. And so I think that would allow silver to get back and test the high at 29 or 30. Same thing with gold. You can see the peak at the very end of 2019, and then prior to COVID, you had 370,000 contracts, 385,000, and then a week ago or so it was 300,000 contracts. Gold has its resistance is about 1920 to 1930. That's where those trend lines are. So those are the levels to watch. And keep an eye on. If silver can take out 26 and then gold can take out 1920 to 1930, you're going to see the metals retest their August highs. Now, I guess as far as a question of timing, in this chart, this is an analog where I'm basically comparing the performance from after the August 2020 peak. And I compare that with historical points that I think are good comparisons. So I compare the August 2020 peak with the peaks from other years. And so one of the lines there, the blue line is 03, 04, and 06 peaks. Then the red line also contains the 2009 peak. So that was a weaker correction, and gold had a really strong, quick rebound after that. So you can see, but what this analog, it argues that gold should be able to continue this rebound and at some point in the first quarter or second quarter of next year, retest the high. So that also aligns with what I discussed in the last slide. Now, let's look at the miners. Here we have the daily candle charts. We have GDXJ on top, GDX at the bottom. And the bottom is in for the miners. I mean, they bottomed at a very strong confluence of support. And starting at the bottom with GDX, GDX did fall below the 200-day moving average in blue. However, if you look at the corrections in bull market years in the 2000s, the bottoms of those various corrections, in majority of cases, the GDX went below the 200-day moving average, and then it bottomed. And most of the time, it bottomed at the 400-day exponential moving average. And so that's the red line you can see there. Now, GDX, it came really close to testing that red line, but it did not. But in any case, it looks like the bottom is in there. And same for GDXJ. I mean, if you look at GDXJ, the 7-year resistance around 48.49, when a market breaks that resistance, then it becomes support. So that was naturally support, really strong support at 48.49. It was also around the 38% retracement of the move from the March COVID low to the August peak. So, and you know, over the last week or two, we can see there was somewhat of a retest or a higher low, and so the miners made a pretty good move higher after that higher low. So the key levels to focus on moving forward are you have resistance for GDXJ at about 59 or 60, and then for GDX around 41, it looks like. Now, I've showed this chart before, and this chart is really important because when these ratios break out to the upside, that is going to signal when precious metals are making the kind of move that's going to turn into an impulsive or vertical advance. Now, right now, they're rebounding. They could rebound back to the highs, but if they're going to break those highs on the first try, I really don't know. It's way too early to say. They could rally up to the highs and then consolidate for another 3, 4, 5, 6 months after that. So, therefore, we have to look at other things. And during the correction, one of the issues for precious metals is they were really weak in real terms. We're seeing capital flow into the stock market. It's flowing out of the dollar. It's flowing into stocks, emerging market stocks. It's flowing into other commodities. And so that isn't necessarily the best thing for precious metals. So, therefore, moving forward, we have to keep an eye on how precious metals are performing, relative to other markets and other asset classes. And here we have 3 key ratios. We have GDX against gold at the top. We have GDX against the stock market in the middle. And at the bottom, we have gold against the S&P 500. Now, at some point in the next year, or maybe it's 12 to 18 months, I don't know. But at some point, these ratios will break out to the upside. It'll be a massive breakout, and that is going to signal a move in gold, in which gold is going to move higher towards the upper 2000s, possibly close to 3,000. And for silver, it could signal silver possibly running to 50 and maybe even breaking above 50. So this is just a chart to keep in mind because this is going to help us signal the beginning of that next impulsive or vertical move. I don't think it's going to happen yet, but that's not such a bad thing. That's still going to give us time. And look, from everything I've said earlier, the correction is over. The lows are in, and the short-term or medium-term trend, at least here in the winter, looks like it's going to be higher for the sector. Now, closing here with a big picture look, we have GDX and GDXJ, GOEX, which is the Explorers ETF, and then SIL, the larger silver stocks at the bottom. And the big picture look for all of these charts just remains very, very bullish. You have measured upside targets that are much, much higher, especially for GDXJ and GOEX. I didn't put in the measured upside target for SIL, but that's going to come in. It looks to be close to 85 or so, which is right around the 2011 high. And you can look at the arrows, particularly in GDXJ and GOEX. They retested the 7-year breakout. So the correction looks to be over, and there's a pretty good chance moving forward, we'll continue to monitor it in future videos, but a pretty good chance over the next 2, 3, 4 months that miners or that the sector will rally and miners can work their way back towards those August 2020 highs. That's all in this video. Before you go, check out the link in the description. It's also right there. If you want to get a free report, this is my top stock pick for the next few years. The stock has 10 bagger potential over the next 3 years, in my opinion. This is just a thank you for listening to this video. I really appreciate it, and I look forward to doing another update for you guys in the weeks and months ahead. Thank you.